Today's session will be about the power of structural movements with the significance of corrections. So right before we get to the session, my name is Chris Hendricks, a member of Never Broke Again. So let's quickly jump into it. So I'll just pull out my Google Drive pictures or screenshots. So today we'll be focusing more on NASDAQ and what it's been doing recently. So the first topic that we're going to cover is the structural movements. So what this means is that we look at how the market moves over a longer period of time. This would preferably be in like the hour time frames and so on. So as you can see, this is a huge structure, and remember, a structure needs to consist of about a few touches on either side where you just connect your trend lines. So the support consists of 3 touches, and the top, as you can see, it's just 2. So before we get into the actual chart, I'm just gonna show you that this was just a prediction for a buy. I forgot the date I took. Okay, here's the date. It's last week. So Nasdaq was predicted to buy. So I'm just gonna jump into the TradingView platform and go to the 1 hour time frame. So this is the part that we are working with from the screenshot, right? As you can see, we had a corrective movement overall because the price was just going sideways. But then we had a distinct correction, or rather a structure, as I connected the support and went ahead and did the resistance there. So if I can just like scale to the 15-minute time frame, you can see that remember that the third touch is the one with the highest probability. So we're always keen on trading the third touch. And as you can see, we had a nice reversal at the third touch right here and a huge impulse to the upside where we were waiting to trade the correction. So we enter the correction, and because it's a continuous signal, so I'm just gonna jump back in. As you can see, we had a huge impulse followed by very small corrections, very small, and it bought all the way. So structures are very effective whether you're trading NASDAQ, currencies, synthetic indices. So a structure where you usually focus on the third touch, you would always have the highest probability. So remember that. So I'm just gonna jump into the 5-minute time frame just to show you that we might have had very small corrective movement. As you can see, we had something here. That was a very small corrective movement, but then here we had a very nice one. As you can see, it still follows our 1, 2, 3 touch strategy. So you can see we had this first touch here and the second one here, accompanied with the third touch where we had the highest probability. So we could have entered a trade after maybe two bullish candlesticks, so roughly around this opening here. So you can see that it followed somehow this formation, and the reason why, it's because of the power that this third touch has within this corrective or structural movement right here. And this is how I predicted Nasdaq being bullish last week, but it eventually reached a high where it just reversed, and I'm gonna show you guys how you could have also caught the reversal without having a structure like this one right here, because this was just too small to have a structure, but then you eventually had nice corrections to a downside. So I'm just gonna show you guys what I had initially. So as you can see, this was the nice reversal that we got, and we had a very small corrective areas around these areas right here. So I was expecting Nasdaq to sell from that point, so I'm just gonna scale in. So this is the point that we're looking at right here. This is where the market reversed. You can draw your horizontal lines, but then I don't like putting those as, like, I know that point is the high where it reversed, so I don't really need to always put like lines and like mess up my charts with like so many things going on. I like to keep it simple, so I just gonna grab a trend line, and as you can see, this is the flag or correction that I had right there, as you can see. So the market did sell and respect this impulse and correction method, because remember, every impulse, there has to be a correction followed by an impulse. So a correction is what you need to trade. You need to spot a correction right after a significant impulse, just like here. So that is how I confirmed the sell from the reversal from the high. So I waited for the correction. As you can see, this is the correction that I was waiting for, and the market sold off. So I'm just gonna show you how much the market sold off by. As you can see, the market just literally turned and went down so many peeps. But then obviously I didn't hold for that long because I didn't think it would be that crazy. But after, again, like, Nasdaq is quite unpredictable, so these things do happen. Unfortunately, I didn't hold this much, but yeah, that just shows you the degree of how much corrections are important, because correction is basically the first entry of the whole trend. So once you get the correction and you enter within the correction, you are better off, because now it means you caught it at the right time. So these corrections are basically the market giving us opportunities, but then the responsibility lies on us to spot these corrections. As you can see here, we had another correction which was rather bigger than the first one. As you can see, we had that. So this works up whether the market is trending upwards or downwards. So you just need to spot these corrections at a reasonable level, and then you just trade them. So with Nasdaq, these corrections happen so often because you hardly get these nice structures in the 1 hour time frame. These hardly happen, so you end up just like relying on these corrections. As long as you know the trend, you need to spot the trend, because you need to trade with the trend according to these corrections, because they form like a continuation. Basically, it's when the trend is upwards and a correction forms, it means that it's about to continue with the trend. So this happens every time there's a correction. The market continues either way. So you really need to trade these corrections with the trend. You can't trade against the trend, because now it reduces your chances of succeeding with this simple strategy. So yeah, just remember that with Nasdaq, you can use these corrections from as little as the 5-minute time frame. But then with currencies, you can't really scalp to those small time frames, such as like the 5-minute time frames. You really need to wait out for like the bigger time frames to form these corrections and so on. So that is it for today's session. Thank you guys, and those who are gonna watch this on YouTube, make sure you like, subscribe, and hit the notification button. Once again, thank you guys for tuning in. Remember, this video was just showing you guys the power of structural movements with the significance of corrections. So you can use these 2 simple steps to perfect your entries, as they highly confirm your setups or your strategies that you may be using, if it's not like price action and so on, because you can mesh or combine all sorts of like trading strategies as long as you pick the right ones. Just make sure you backtest them and so on. So thank you guys for tuning in once again. This was Chris Hendricks. Never broke again.